Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So you can see that the market stands in a relatively tight range. Makes us think that we on a daily chart could get some kind of flag consolidation around the confidence support, which is potentially bearish. And actually on the daily chart the target mostly is the same, as 108 approximately area. Right there, this is 1618 extension of the same retracement. So we use as a potential destination point. It's also, this will be 50% daily fib support in this area, 108. So you know the 50% is most favored levels on euro currency. Currently, it is really tricky performance on euro currency, just because, but actually not only on the euro currency. Just because yesterday we've got retail sales numbers, and those of you who have taken a look at it probably saw that they have actually been released 2 times smaller than market suggests, and it was a really huge downside revision on the month before. In a common situation, this should be definitely negative reaction for United States dollar and should support the euros, just because this is absolutely clear facts in favor of the Fed easing of the policy. But nothing of this kind we have seen. So you can see the market shows absolutely no bullish reaction, and I would say not only on the euro currency, but if we take a look in the gold, and the gold actually collapse has happened, the market actually has completed the target that we have discussed yesterday. So I suppose that this is symptomatic performance. Just if you take 2 plus 2, you will see a few moments. And first of all, the Fed, United States Treasury deposit in the Fed has dropped for 50 billions in a week. So previously it was 140 billions, right now it's around 80 billions. So it means that Fed has some safety of margin safety, well, approximately for a week, maybe a week and a half, and 2 weeks in maximum. But if we will try to judge based only on the cash. Why actually demand for the dollar stands if there is some really turmoil around the possible default? Well, first of all, it's because nobody think right now that it will be, let's call it as a real default. So it may be technical default for for some time and so on. And demand for the dollar stands just because if default in one or another way will happen, that will push the interest rates significantly higher on treasury bonds. And as you know, based on the overall euro-dollar system, the treasury bonds used as a collateral for a huge amount of different financial authorities, financial funds, hedge funds, and so on, for getting liquidity, building the leverage for trading, and that will lead to massive devaluation of the collateral. So you will have to add more margin because of the drop in the price of the bonds, and this should trigger the demand for United States dollar. It's actually how it was actually in the beginning of the last year, when it was massive demand for United States dollar. So that's what we see currently, and this also explains why the really even big changes in the major statistics brings very small impact on the markets. Using the cross-market analysis, especially if we'll take a look at the gold market and Forex market, in particular on the Great British Pound, for example. So take a look on the cable, we have completion of the XOP target here, and it's forming some kind of the hand and shoulders, which is also suggests this probably could be dropped here, at least by the shape. On the intraday charts, you could see that the market was trying to form some reversal here with a minor hand shorts and has failed, suggests drop below these lows. I am showing you the hourly chart of the cable, which suggests theoretical downside continuation. On the Japanese yen, we also have upper directions strength in the United States dollar. As you can see what's going on in Japanese yen, potentially bearish patterns are still valid, stands valid, but this performance also shows the dollar rising. By the way, on the Japanese yen, I would like to show you this chart. So for the fans of the Japanese yen, if you are trading, it might be interesting to you. So we're coming to the nicely looking godless triple to sell around 136.93, 137. So we are not speaking about the major reversals. The yen should start dropping here, but at least some minor reaction here might happen, some retracement. This is mostly for scalpers. So all this stuff makes us think that euro currency also stands currently under pressure, and that's why it makes us to anticipate and be prepared for another downward continuation. Besides, you could see that here, as we already talked about, the acceleration, tail closing. Now oversold level stands significantly lower, so market right now stands only on the confidence support. Some kind of the bounce that we talked about has happened, and you can see we currently has changed our primary level to watch to the 109.10 yesterday from the confidence of the 109.50. This market dropping out from there. So target we have we discussed already. On the 4 time frame chart, here's what we have. Market bounce from the XOP. That's the level that we just talked about for potential position taken. Now market has dropped and returning back to the lows. So if you have taken short position, move stuff to the break even. The one of the patterns that theoretically euro could try to form, this might be, for example, something of this kind. So this might be some butterfly. It's because 161 extension 1 or 8 stands very close and actually in agreement with the daily target. It's just, well, 15 pips difference. That's theoretically that we could keep an eye on. For us, currently this level is becoming the vital one, just because we're already taking the positions. And even for the short-term performance, if market will break the tendency of the lower lows, lower highs here, it might mean something. But currently, for now, short-term bearish context still valid, and we are watching for downward continuation based on the cross-market analysis as well. On the 4-hour time frame chart, maybe, I'm not sure yet, but it seems that we could get some kind of here signs of maybe some bearish dynamic pressure, something of that sort, just because market trend stands bullish, but market actually is standing around and it's returning back to the lows. We will see. But overall view, it seems that, well, chance on downward action seems a bit better than possible immediate upward reversal.